Hello guys, glad to have you on board again today. Yesterday was a very interesting session and I thought it was worth going back to it and its key components. What am I doing? Multiple time frames of my portfolio managements have been impacted yesterday. So I have traded quite significantly in terms of numbers of position, not necessarily position sizing because we're still very indecisive. But still, I thought it was worth giving it a review. So multiple trades yesterday, rebalancing in the portfolio, reinforcement, arbitrage, lots of things have been done. For a simple reason that I think yesterday was one of these sessions in which swing traders have started getting back into the market. So we'll see everything about it. We're going to scroll all of the assets one by one. So first of all, cryptocurrencies. Let me be real clear, nothing interesting in big names like Ethereum or something. We're still trading right in the middle of the dump zone, so don't be overthinking things. But what really stood out to me yesterday is that we're oversold in a bullish cycle, which is, oh boy, what the hell is that? Remember the thing that we've seen on the weekly charts, on the weekly updates? We do have signs of a mature range due to that signal that's closed yesterday. Tell us that we have a bullish trend channel. Everyone is stupid enough to think this is a bear flag, whatever shit that is. The bear flag in a bull trend, good luck with that. So I think we're going to ride that thing and we're probably going to remain or eventually try to break down of it. But there are very less chances for this to succeed. So I think lots of noise could still be rippling within the next few days. Still be patient and risk manage. My position yesterday has been full on Atom because I think that's the only one that's providing definitely interesting risk limitation in this area. Still, that doesn't mean it's going to bang, be a safe bet. It's going to rebound very quickly, bro. It's a win-win. No, it's not this, okay? It's going to be complicated, and I think it's going to be noisy just like it was back then. For multiple reasons, the 4-hour chart that tells us exactly the same story. We're diving in these areas anyway, every time the same way, meaning that we do this with a pretty volatile thing. Look at how Atom behaves anytime it dips below $26. It's always stupid. Very stupid. So we're below 26. We're very low volatile. We're squeezed out on prices. And yes, I bought exactly at the top, or at least near the bottom, and exactly here yesterday. I give you the position sizing so you don't get too hot on this. 0.5% risk taking. This is leverage trading, though this time I'm margin trading Atom, nothing related to the long-term portfolios or something, just a trade because I think we're absolutely stupid in pricing Atoms. My pricing models still place it over $100 to $150 at least, which is out of current fucking prices, 5 to 7x. So absolutely crazy bullshit in terms of pricing on Atom. I still never thought we would go down there. This is just like given prices for Atoms. So, well, I made an entire video about Cosmos, letting you know that this is not an easy context, an easy ecosystem to navigate, that there are lots of risk in there, and that the value is going to be hard to track, and that if you just simply think that buying Atom is going to be easy, whatever. So I explained that there is one way to cover for that risk by using the airdrop mechanism, but still, like I said, if you missed on Atom, meaning that you don't yet have it, it's going to be very complicated to enter this ecosystem without risk taking. Well, at $20 a piece, fuck it, I think it's worth it. I'm not going to just turn around these things. I'm just going to be straightforward. $20 an Atom, that's a given. Even without the airdrop things or whatever to risk limit. At $20, well, if you're wrong, you're going to lose 50% of it. We're going to go $10. And if we're right, this is a 5 to 7x. So I think the risk to reward ratios is as crazily attractive as it could be. So I'm on board, even though I'm doing it on top of my long-term portfolio with speculative trades. You know, I'm really overweighting Atom already in the portfolio. But when I saw yesterday's prices, I was like, boy, I cannot just not take it. So out of the assets that I followed, of course, I don't trade inside the dump zone. We're right in the bottom of that range. I know it can be dumbly traded within the next few days or months or weeks, but boy, this thing, when it's gonna recover, it's gonna be a rocket fucking ship. If it recovers, once again. And don't ever trade someone else's trade, okay? I might be very confident with Atom, but if I end up being proven wrong, don't come after me to say, you lied to me, Phil. You make me lose money, okay? Don't do this bullshit. I never tell you to do something or that, whatever. I just tell you what I do and why I do it, okay? So pure and simple it is. For the rest of the crypto market, well, I'll make a video about Monero because this one definitely has to be covered perfectly. But I think Coinbureau is going to do one as well, so I'm going to wait until he's done with it because it's going to save me a lot of time, and I'm going to make a complementary, more technical vision of it afterwards, but definitely have to talk about Monero. Okay, you'll also see that I have removed some of the assets from my list. These assets, mostly from the Cosmos ecosystem, haven't been sold at all. Just that they have been way oversold. Like, I mean, Osmosis yesterday was trading $4.20. It's crazy shit. So I've just removed some of these assets to have a bit more space in my list. Though all of the Cosmos assets that I haven't bought them. I swapped them from my revenues from atoms and stuff like that. So all of these things are still in the portfolio, never going to sell them, even if they go to zero. I don't give a fuck. These are risk managed assets that I bought with gains. Pure and simply, if they go to zero, I haven't lost anything. Though I just removed them from my list for spacing perspectives. Okay, despite that, those stock markets, everyone was bearish yesterday. This is the end of the world, whatever, because Friday was an oversold session, was something like that. Okay, once again, look at the fucking prices, stop talking, just risk limit, okay? Can we have a bear trend on such a thing? No! Bullish moving fucking average. So the best we can get is a 1-to-1 ratio if we break. So are we going to break? Possibly, yes. There is a breakout target. So that tells us one thing. The market is trying to. Is it going to succeed? I don't know a shit about that. All I know is that I don't give a fuck. Sorry about the swearing, but I need to be real clear. The only thing that I have is that the bears might be taking profits. Not necessarily now, because this is real-time signal, so I wait till today's session to see about it. But even if the market tries to break, it's a 1-to-1 ratio at worst case scenario, which will lead us to the minus 20% retracement of all-time highs, the level in which I'm totally willing to buy, and we will get to a fourth range boundary. This is a negative bearish. This is a bearish third range boundary. So it tells me that the targets for these trades are below the previous context, okay, and below the support context at closing. So yeah, I know that this is where I'm willing to buy. Does that mean the market will get there? I don't know. Does that mean I have to sell on a support? Fuck no. What I can tell you for sure is that I know where I'm buying now. I'm buying here. Though that means I'm not interested to buy there. That means I sold when we were there. This is what happens. So here is a risk limitation area for those who sold there, because that's where we confirmed the trade. We're back into the previous support. So this is where the professional traders are locking on their gains, partially. They'll probably remain bearish in the market, and that means the bears have controls of prices in Wall Street. And yes, I said it, and I said it out loud. The bears control prices in Wall Street. Hear me well. It's not terminated anytime soon. But that doesn't mean we sell on fucking supports. We're risk managed. This is where the bears will pay for their profits, for their stop losses or whatever. But this is where bears stop selling. They're just going to wait and let the market digest. So multiple things could go there. If the bears gets very bear, meaning that no one is buying in here, and if the market makers want some volatility due to external factors, not to mention Apple's earning fucking release on Thursday Eve. So if these things are disappointing, well, we're definitely gonna fuck up this support, but that doesn't mean we can anticipate that. So until then, if for some reasons the earnings are neutral or whatever, we can build any intermediate kind of structure. Remember that ranges can take so many forms that you cannot anticipate it. So the only thing I can tell is that for now, the pressures are bearish in Wall Street in general. The bears are in control. They can, and bulls can try neutralizing prices in the short run and eventually take over later, okay, but we'll see all about that. I still believe the bears really have control. So neutral tainted vision is what we are into now, because the bears are in control, but we're all on supportive territory in a background bullish trend with rising moving averages and so on. So of course, the bears are cautious, and they very likely will have to, because otherwise they will be stupid. Overconfidence in the bear trade is stupid. Even if the sentiment is bad and things like that, this is the end of the world, the Fed is getting hawkish. Bullshit. Look at the prices. What do they do, and what is the context telling us? The context tells us that the probability of a bearish breakout in here are there, because we've been excessively bullish before. But if we do this, we're going to retrace to the supports. That's all we're going to do. The 1-to-1 breakout tells us that if we get there, you're going to be sure I'm going to buy that there. I'm definitely going to buy Wall Street if we get out there. But I don't think we necessarily will. All I know is that we have to be patient. Okay? and eventually bearish or hedged if you want to in some case. My current concern mostly surrounds the dollar, okay? And I'm going to have to talk about it because, of course, your dollar is trying to break below these supports. We don't risk manage once again. This is the same old stupid stories that I've seen over and over again during the latest couple of years. When a market has a narrative, it tries to go all the way through it until this is stupid enough to reverse. So eventually we're going to push euro dollar to 1.04. This will be the 1-to-1 ratio of this area. And if we do this, I'm going to be real clear with you guys. This is stupid. We try to accelerate. I don't nearly think we're going to break out of this range. I could be wrong, and in that perspective, I'll take a stop loss. But what I wanted to share with you guys is that I'm definitely not invalidating my trade until we break, meaning that I want a daily close below 1.04. So I'm buying the fucking euro dollar. I already was, and I will buy again in the nearby areas. But I also do it with large stop losses, meaning tiny position sizing, because I know the market is dumb and I know the market is willing to go dumber, because that's really all about it recently. Prices have to be absolutely stupidly traded because of what I said. 2022 is the year of crisis. It's the year in which people don't know where to find value. They don't know where to hide, so they're falling for narratives. Right now, the narrative is that the greenback is the safest thing and the safest place to be into, even though if there's $2 trillion slipping at the Fed each and every night, which means that there is way too much liquidity in dollar that is waiting to be invested. So the only thing is that there is a shitload of risk with dollar, but people don't see it. So be very cautious with that. Very cautious. The narrative about the dollar being the safest haven among that entire bullshit that is everywhere in the world, this is what I call the automatically centric vision that the US have. This is their biggest problem. They always just see their own situation, and it's very dangerous. They always see whatever happens elsewhere, and they don't see the problems in their own neighborhood. Very dangerous thing. Once again, the narrow visions of US is what always led them into the worst recessions afterwards. So I hope this time US won't be dumb enough to do this, to think that the problems are worse elsewhere. You guys have a lot of problems to deal with. And if you think that you're going to just be safe out of this crisis, no way, guys. The shit is hitting the fan pretty sooner rather than later. The problems that came out to Europe from Ukraine shit, that is, it's coming to you guys, and when it will come, you have no safety net. That's the biggest problem in the US. When the shit hits the fan, there are no safety nets because you have absolutely no social spending and all of these things. So big problem with the poor guys in the US. And once again, these guys vote, these guys talk, these guys can riot. And of course, if you think it's going to be easy to go through the next crisis that is rippling into the US, well, you might want to think twice. So like I said, this is my narrative. I think that US is heading into so many problems that they don't even see, because generally US think they're better than the others. But this is mostly because of this. Okay, so the narrative as usual is the ID that I trade, but I always risk manage. The biggest problem for me is that if I go to the monthly chart, we have closed volatility boundary in here. These are yearly Bollinger Bands, folks. So, well, if you fall down the cracks of the narrative that there's going to be parity in the euro dollar or shit like that, well, I can tell you it's not going to happen. It's not. These things have a background bullish trend, okay? So if you ever think that there's not going to be huge people betting against your trades, well, I will be among them. I will definitely buy a shitload of euro dollar. I could be wrong. There's going to be a risk limitation and all of these things, but I'm going to be on the other side of that trade. Same thing goes for USD GPY, which is trading the same closed volatility boundary on the opposite direction. Everyone thinks yen is bullshit. They're printing so much, whatever. Okay, I can tell you one thing. These narratives are for the dumps. That doesn't mean these things will reverse violently, like there's another crisis looming and we're going to reverse just like COVID. No, I don't think. I think we're going to be there for long enough until this narrative exhausts itself and we're violently going to go the opposite direction. So it could go quick. That's the reason why I'm going to enter early, okay? But I also know it's going to be dangerous. And it's going to take long to get there. But I think anyway, US will face severe consequences of the tremendous money printing that they've done. US is the country that has spent the most for COVID. And there is not even a country worldwide that has a significant or comparable impact on their monetary policies. So Yes, lots of problems coming for the US, mostly due to inflation now, but it's going to be way more deeper problems later. The other trades that I've made yesterday was the arbitrage of WTI and silver. So I bought silver and took profits on my WTI trades. So I'm no longer bearish in WTI, and I'm reinforcing bullish trades on silver. Of course, these are daily trades, so this can take longer to validate. I expected to get a signal yesterday, but I did not. So I am still trading cautiously between these two. But I think, yeah, silver, I'm buying it anytime it tries to go below. We tried to accelerate yesterday. I would like to get a signal, so I know this can be glitchy in the short run and things like that. When it comes to WTI, we're in the bottom of the range, so as usual, profit take, I'm out of this game, and if we retrace, I'm selling again, okay? So really, that's what it is. When we go high, I profit take on silver, and I short sell WTI. When we go low on the range, I profit take WTI, and I buy silver. Now, I done that trade yesterday. Limited position sizing once again. And when it comes to Apple, of course, everything will happen on Thursday. Estimations suggest a 10% year-over-year growth, which is, once again, 3 consecutive months of deteriorating growth, which is not good in a market that has gone so high. But still, this is where prices should go. Of course, there's some other factors impacting, like the share buybacks and things like that. But this is where prices should go, of course. We'll see, of course, then if Apple is beating that consensus, yes or no, how much, and most importantly, what's the guidance for the next quarters. You know I'm selling this thing because this is an arbitrage. I'm selling Apple and buying ETH. I could be wrong, but for now, I am significantly not confident into the future of Apple, but I could be wrong for 1 quarter. So I don't know anything about these earnings. Are they going to be cooked enough to hide the problems, which I think could be done. And once again, Apple is not a bad company, but Apple has significant root problems now due to the lack of innovation and their absolutely stupidly reckless spending, in which every dollar that is made is directed to the shareholders until this story ends. So we'll see, of course, but this is very dangerous. It was really clear, when you buy back your shares after 20 years of growth, meaning you're going to create a bubble, and that means you're going to push up prices artificially, and this will have the same effect to the downside afterwards, because you limit the supply. So when there will be less supply and everyone's selling at the same time, prices will fall very rapidly. So this is one of the rare cases in which trends can be reversed instantly. So yes, there is a bull trend on Apple, but it can go from bull to bear. This is one of the rare cases in which we can break the moving averages and install bear trends out of them without a problem, okay? So only rare cases in which it can happen, and of course the probability of this to happen is very, very low. So be very cautious with this. And that's going to be it for today. Okay. So I think the stock indices are very neutral right now, and there could be a lot of rotations from sectors to sectors. Some sectors have been absolutely destroyed, like the biotechs or whatever. I think there can be so much money going into these sectors. More importantly, I think there are some very attractive prices in Europe. The euro indices are trading below 15 in terms of PE ratios, where in the US we're still above 23. So there are lots of investment that could be made in Europe that has been oversold due to the stupidly rhetoric of consequences of the war or whatever. So I think there could be a very, very rewarding investment narrative in the US to export those over liquidified dollars. I mean, there's so much liquidity in dollar. Even if the Fed trying to normalize the monetary policy, there's $2 trillion fucking dollars sleeping every night at the Fed. This money has to go somewhere. I've tweeted it yesterday because that stunned me. $2 trillion parked for a negligible amount of yield every night at the Fed. This money just doesn't know where to go. So there's too much money in the US because they have printed like crazy. And even if they try to unwind it, the damages have already been done. This money will have to go somewhere. And like I said, $2 trillion, that's more than the entire crypto market cap there is today. So when this money will start finding outcomes, areas to invest, these flows of dollars will be massive. And if they ever are invested elsewhere, meaning China has been so crazily oversold, I mean, so many investments could be made elsewhere due to the strength of the dollar. So if the US dollar is invested elsewhere, that means selling these dollars for another currency. And that's one of, I think, the biggest narratives people will start talking about in the big investment firms. Investing those overly priced in dollars elsewhere because they're probably going to return more value in other currencies for the next year. So for those who trade on a day-to-day basis, they're going to short sell euro dollar because that's the trend, bullshit, whatever, okay? But in a longer run, swing traders and arbitrageurs will start to see opportunities elsewhere due to this over amount of dollars circulating at a very expensive price. So this is the thing. Dollars worth a lot, and there are too many of them, so they're better like to be invested somewhere else. Every professional risk manager knows that. I'm talking with another set of professionals, ex-colleagues, or whatever, okay? Everyone is aware of that now. If there is a trend starting elsewhere, everyone is going to ride up that trend, okay? And there's this trend in terms of risk-reward ratio is very likely going to happen elsewhere than the dollar-stamped valuations. Dollar stocks are way too high. Some may rebound, but the investment strategies for value trading are going to be elsewhere. So pay attention to this narrative. The dollar may look strong, but if the money goes elsewhere, these dollars will be sold to other currencies, and that will have an effect on the change. And like I said, out of yearly Bollinger Bands, I think you should be cautious with the narrative of the greenback being the new gold. Probably not. That being said, we're going to talk about that multiple times within the next few months. This is my next biggest strategy, getting straight in to the currency war, because I never thought we would be reaching those levels that quickly, but here we are. I'm not there to enforce my timing in the market. We've gone faster than I thought with this stupid dollar narrative. I'm going to actively start fighting against it now that we're getting closer to these yearly Bollinger Bands. These will be my risk limitations. Okay, that was it for today. So I think big session yesterday, but way more bigger sessions will come afterwards. But we're getting into swing interesting territories. That was the message for today. Bye, guys.